So everyone's worried about the pandemic. Is the pandemic over? Well, you know what? It didn't stop 4 million people from opening a new business last year. What is this going to mean for you? Hello everybody, my name is Barry Horvath and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you so much for joining us today. So yes, is that crazy or what? So the pandemic was awful, but it taught us so much, you know, as a nation, as a world. I think it taught us a lot of things, and one of the things that it taught us is to be different. You know, a lot of people, it took everybody back, and I think people started doing more of soul searching and seeing what else am I good at, because, you know, they either lost their jobs or hours got cut or something like that. So people really kind of had to kind of like dive into themselves and see what else can I do maybe.
People had to reinvent themselves for sure. And what happened out there? And what's happening now? And what does it mean for you? I'll tell you what it means for you. Oh my gosh, all the people that went and opened businesses, we're going to talk about how that impacts you. But first, let's talk about how it affected the market, DeLynn.
Right.
Crazy what happened. I mean, here's what we learned about the pandemic, at least what I learned, that people are staying home more. People are okay with staying home. People realize that their home is their fortress. So what did that do to the housing market? I mean, people hated being on lockdown, so people are renovating old homes. They're getting cash out on refinancing to remodel, put in new floorings, add
an office,
add the outside oasis, backyard oases are
she
now.
shed. Sorry,
yeah.
Maybe that's just me.
They're doing all kinds of creative things because they know, you know, they learned it's okay to be home. I mean, and so they need cash out. And they learn that they don't want to live in a city where there may be a lockdown.
Right.
So people are moving into the more rural type areas because, I mean, let's face it, who wants to be shut down?
I know. You know, and the thing is, and businesses learned as well that people work fine from home.
Yes,
right?
yes.
So that helps spur some of the market. So the crazy market that we're in, everyone, do we see any slow up? Do you guys see anything? I'm seeing more contracts get accepted.
Yes. So actually all predictions are right now.
I know our realtor partners out there, you guys love those cash deals that are going down.
Yeah, but money is still cheap, so keep coming to us.
Yeah.
Right now, all the predictions are that this market will continue. Everybody says, oh, it's going to bottom out. It's going to bottom out. It's not going to bottom out.
It is not a bubble.
No, there's not a bubble. I mean, let's face it. We talked about it when we had Bill Middleton on. Supply and demand. You know, when demand exceeds supply, we know that prices are going to continue to rise. You're going to have bidding wars. I mean, look at we get pictures from people standing in line, waiting to go in and see a house. And how do you deal with that mentally when you want to buy a house? You're like, oh, I've been all pre-approved. I feel great. I'm all excited.
I think some people have dropped out.
Yeah, some people have. They gave up. They're like, I'm going to sign another lease. I'm going to pay for rent again, which, by the way, are continuing to rise. Okay.
You know, the other thing that I think is that, you know, we had so much cash influx, you know, people coming down here on vacation or whatever, because our market is still less expensive than, say, New Jersey. We were just talking about our friend in New Jersey whose taxes alone are $25,000.
Who wants that
taxes
bill?
alone, right? So down here, they feel that this is a bargain and a half. So when they sell their homes up there that are worth way more, they have all this money. But I think because the summer is here now, I think people are going to start doing vacations. Kids are out of school. They've got things to do. So I think they're not as focused as moving as before. Hopefully that opens the door for some people around here, these first-time home buyers that we have lots of,
Right.
sitting there waiting.
Things are opening back up. Let's face it. People are getting comfortable. People are going out in public without masks. The mask mandate has been lifted. Things are getting back to normal, per se. So we're going to start seeing more open houses again, which we already have.
Which is lovely to see, and people are coming out, and there's not a line anymore.
Yeah, so that's
They're full.
That's actually a positive sign for
It
the
is.
market. So, I mean, the things that we've been seeing, we've been getting contracts in. What are the buyer's agents doing right now to help people in this crazy market get a house? Well, first, we know they're not going below asking price.
Right.
They say nationwide 30% of all contracts are above asking price right now. Here, when's the last time you saw one below it?
I don't know, forever. Forever.
Listen, when she goes, that means she don't know.
I don't know. Forever.
It's just not commonplace. You don't see it.
And they're not and they're not getting closing costs.
No,
So no
they're
closing
not.
cost
No
assistance.
closing costs are being paid pretty rarely, unless maybe the buyer and seller have some kind of relationship.
Inspection contingencies are being waived. Selling your current home contingencies are being waived. Things like that. Risky stuff, though, which we've talked about a couple of weeks ago on the show.
Yeah, and people are okay with paying above market price because they know that in a very short time they can recapture whatever they're below appraised value.
Right.
What are they having to do? Obviously, they have to come to closing with more cash on certain loan programs, because if you're doing a 95% program, remember your lender is only going to lend to you on the contract price.
Is that Apple for sale?
Or appraised value, whichever is less. Okay?
Correct.
That's just the name of the game.
And that's the way it's been forever. That is not a
And
new
people don't
rule due
understand.
to COVID or anything.
Now, if someone's putting more than 20% down, it really has no impact on the loan. It might affect the rate slightly because of the loan to value, but outside of that, if you have a buyer putting more than 20% down and the property doesn't appraise, you're probably going to be okay. And if I were a seller, that would be the kind of contract I would be looking for in this market.
Stop. Don't say things like that. I have a lot of people who don't have 20% to put down who want to buy a house, too.
I know. Hey, there are contracts being accepted with 3% down, 3.5% down. There are some VAs going at 100%.
And with down payment assistance programs.
The down payment assistance
We
program.
have a couple of those going. So
Yeah,
thank
who
you
would have
those
thought?
sellers. I know. Thank you to those sellers who
that want to
said
help
yes.
those first-time home
Right,
buyers.
right.
Yeah, there are first-time home buyer programs out there right now that open up with $10,000 of money available for them.
Yes.
Yeah, I mean, let's help these people that want to buy a house and not rent forever. So I get it.
I get it.
And I think the biggest thing I'm seeing right now is we just had one right now where they allowed the seller to stay in just a little longer
Yes.
till they could find another place. So that's
The flexibility
Yep.
of your closing date and your moving date.
Yes,
Don't
so
necessarily
that-
have to be the same day.
There's the tip. So it's all value is a perception, right?
Right.
And if you love this house and you really want this house, you're going to be willing to pay the price for that house. If it's in your perfect location, perfect school
Right.
zone, everything you want, the number of rooms, the game room, whatever, or you see potential to make it that, you're going to pay that price.
Just like the price of apples.
Exactly. So anyway, hey, let's bring someone on here. What is really the value of an apple?
Excuse me, is that Apple for sale? Yeah, we're about to put it on sale right now, actually. Well, I'm in the market, so tell me about your Apple. Why should I buy it? Nice try. Okay, people, here's how this is going to work. I have an apple here. The highest bidder's going home with this. I want all bids in the next 2 minutes, then we're closing it. Bidding starts at $5.
Feeling pretty confident there, huh? I mean, don't you think?
$10.
He said starting at 5.
15. Is this a new apple? Yeah, just listed. I'm pre-qualified. I'll pay cash. I got cash. 20. 30. 40. No, just make it 45.
Is it even worth that?
50. I don't know. Please, this is the 8th apple I've tried to buy. Could I at least see it up close? Nope, it's an apple. You know what it is. You either want it or you don't. I'll take it for 100. What? I'm from California. It's the cheapest apple I've ever seen. 120. Why did I do that? Why? I don't.
I could watch that like over and over and over again. I totally love that.
But doesn't that feel like the housing market today?
That guy nailed it.
It's
he
to a T.
nailed it.
It's to a T. And it's almost like what we talked about, out-of-state buyer.
Right.
I'll pay $100 for it. That's a bargain.
Cheapest
here.
apple
Think
I've
we talk
ever
about
seen.
our New Jersey people. They'll pay, whatever for that apple.
Exactly.
So,
I love that video.
I do
That
too.
guy really nailed
Hey,
it.
it wraps up the market in one, little snapshot
Right.
in reality of it.
It really does.
So what's surprising to me, DeLynn, in all this craziness of the Apple, you talked about it earlier, how people have reinvented themselves,
I know.
And
I think that's nice.
Yeah, so
you kind of dig down in your soul and say, what else can I do? Because my job's not going good right now, or I'm laid off, or whatever it is. What else can I do?
Well, the fact that we had a record number of new businesses register during a pandemic, it actually shocked me. I was surprised at that statistic because, people have reinvented themselves. What was once a viable business is no longer, so new business formed. A lot of online businesses were created. A lot of, look at Zoom. Who even heard of Zoom before the pandemic? Did you know about it? And now the variations of Zoom are coming out with video conferencing. There's all kinds of new startups out there on how people have had to reinvent themselves. So the record number of new businesses started in 2020 is crazy. But what does that mean for you if you're applying for a home loan? You have a brand new business, you just started it, even though you may be in the same exact line of work. Let's pretend you left your job and your company shut down and you started a new business in that same line of work. What does that mean for you? DeLynn, you love these files when
I
they
was
come
going
in.
to say, I know. Means you're not getting home right now.
Unless you're that cash
Sorry
buyer.
to be a bearer of bad news. Yes, unless you're paying cash, because mortgage lending, for all of those people, those 4 million people who started new businesses, I'm shocked by it. I'm in awe of it. A little bit jealous maybe because they're creative and I'm not.
Right. They might be dying on a vine and starving, but
Yeah, I think that's pretty cool that a lot of people, did that and reinvented themselves. In the mortgage world, however, though, on all self-employed, we need a 2-year history. That is something that has not changed. No matter what, if you're starting a new business or if you are going from a salaried job and now you're going to start subcontracting, doing the same thing that you were doing, but you're now a subcontractor for maybe different companies and you're getting a 1099, that is also considered self-employed. So in order to do that, they have to have a 2-year history before doing it.
Now, on the other side of that spectrum, if you were a 1099 and you went W-2 with a company in that same similar line of work, you may qualify immediately. Isn't that funny? Just because you're having taxes taken out, your FICA, everything being taken out of your paycheck, doing the same thing. Now, that doesn't mean your company can start paying you a payroll check and all of a sudden you qualify. It doesn't quite work that way, okay? You're still self-employed collecting from your own company, and a lot of people do that, but that doesn't mean you qualify. Oh yeah, I have a W-2. No, you're still self-employed. You still have to meet that 2-year guideline.
And basically the reasoning for that, just so that everybody understands, the reasoning for that is when you are all of a sudden self-employed or subcontractor, now you're responsible for getting your own business. Just like the real estate partners out there. You guys are 1099. You're responsible for going out and making your own business. When you're working for a business, maybe you work for a dental office or something like that, and you're getting a regular, paycheck and W-2, that's different because you're not responsible for actually making the dental office successful. right? You're not responsible for getting the patients in the door. Whereas if you were subcontracting, that's all on you. So that's why they need to know that you can do this, and their rule of thumb is if you can do it for 2 years, then that's a good average for us.
All right. So you know what's so funny though? Anybody can get fired at any time.
I know.
You know?
Nobody. I
So,
know.
listen,
but we can't.
Listen, folks, we don't make the rules. We just tell you what they are.
just follow 'em.
And they're ever changing. So something else that came up for you self-employed people since the pandemic started, since we're talking about all that.
Why not?
Is the fact that, you know, it used to be we didn't, you know, they gave us you got 2 years tax returns for documentation.
Yep.
Okay, there's your proof for self-employment. Of course, they're going to check the public records to make sure you really are. But the other thing is now, you know, the year-to-date P&L,
Profit and loss statement.
which is a profit and loss statement and showing income. But now you must provide 3 months bank statements showing that you actually still have money coming in, because a lot of businesses weren't having money coming in. But yet, you know, a P&L is just what, you know, that's the paper you printed on. So now you need proof.
And quite
that
frankly,
income is still
they backed
consuming.
off a little bit on that, because I remember in the early days of the pandemic, I actually had a client who was a massage therapist, and we had to get copies of her clients' checks. She was independent. She went hospital to hospital. We had to get you know, proof that a client was paying her, like, you know, a few
Right,
of them.
right.
So they've backed off a little bit. Now they just want to see the bank statement to make sure that you're depositing money on a regular basis.
Which makes sense. I mean,
Which makes sense. That just like getting updated pay stubs, right before closing for somebody who's, you know, works for someone.
let's face it, if you're going to borrow money at a record low interest rate, the lender needs some protection. They need some assurance that you are going to be able to pay it back. They want to know that you're there. And self-employed borrowers bring on a new layer of risk. Now, you know what someone said to me? My rate's going to be higher because I'm self-employed. Is that true?
No, that is absolutely positively not true. Self-employment has nothing to do with your interest rate.
True story. I had someone on the phone.
I didn't know that somebody said that
I
to you.
had someone say to me, yeah, they told me, because remember now when you check, you know, when we do our IRLA 1003, you know, it's self-employed
Right.
box, they said their loan officer, told them that they had to pay a higher rate because they were self-employed.
No way.
So, you know, you just wonder what comes out of people. You either meet the guidelines or you don't. You know, your credit score is either good or it's not.
Right.
Your score is either a 620 or a 800.
Right.
You know, there's, you know, but it's so funny what comes out on people right now. So.
Yeah, so there's a myth for you.
Yeah. There are so
Whether you're
many
self-employed
myths.
or not has nothing to do with your interest rate.
Yeah, so self-employed people do have opportunities to buy.
There
And
are alternative programs.
There are alternative programs. There are bank statement programs, actually, that, you know, if you write off everything, and remember, when we look at your tax return for self-employed people, here's another thing that can happen to people. You've seen it. Let's pretend you've had this job for 20 years. You're W-2'd. You get a paycheck every week, it's consistent, and then somebody told you you should go in this side business because you need a side gig. And you're going to make all this money doing the side gig, okay? And then you're going to recruit all your friends to do the same side gig, and then you're going to be rich and retire. No. The way it really, reality, right? And then you file your taxes, and your accountant or CPA or your tax preparer says, hey, what's that side business you started? Do you have any invoices, any bills, any receipts? You're like, oh my gosh, I lost my tail on that business. My friend recruited me in, blah, 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 whatever it might be. And then you took all those items and you wrote them off on your tax
Your
return.
accountant says, oh, we could write that loss
And you'll
off.
get a bigger refund. Well, guess what? All of those write-offs now are deducted from that cushy W-2 salary that you've been getting for 20 years. No longer is so cushy because we just deducted all those losses from that other side gig. And
Definitely a two-way street there.
Now you don't debt ratio for that $500,000 house you've been dreaming of. So before you do the side hustle, think about the repercussions. Before you decide to write it all off, think about the repercussions. Talk to your lender about it. How is it going to affect you? It may not affect you at all if you make $1 zillion a year, but we've seen it though. And people ask, why do you ask for my tax returns?
I know.
That's exactly why we ask for them, because we want to know about it.
And keep in mind,
there's more.
Everything gets verified through the IRS, so it's not like you can hide them. We have people try to hide the tax returns too, or they take pages out. Guess what? Underwriters know how many pages are supposed to be there. Even though not all of the IRS pages are numbered exactly, so they know when one is missing. Trust us on that.
Every loan requires what we
All of
call,
them.
and when I say every, I mean everyone. I'm not saying, DeLynn and Barry make up their own rules to make it harder for people. We don't make up rules, okay? We just follow them.
We would make them easier.
Yeah, you would need nothing. Just give us stated income, stated assets, show up closing.
Oh, wait a minute. People already did that. It didn't work out too well.
It didn't work out. You guys remember 2005. You go, you got a house. So Dodd-Frank changed that. 2011, the rules in place, the borrower must prove the ability to repay. Now, every lender is going to verify with the IRS a tax transcript. So just because you have a pay stub that shows this amount, whatever your tax return filing shows with the IRS is the income that's going to count. If there's a discrepancy, obviously we're going to figure it out. And that's just the reality of it. So self-employed people add another layer of risk. They
definitely have their challenges.
And we're grateful for the 4 million who started new business last year.
I know.
Because that's the heart of our country right there.
It is. Isn't that like, I'm proud of that. I'm proud that we had, 4 million people that inventive. Like I said, a little bit jealous too, because they are obviously really, Anyways, the other thing that you were talking about with the self-employed people, it's not that you can't get a loan, it's just that it's going to take a couple of other challenges and a couple of other things. So definitely talk before doing anything, before, like Barry said, doing that side hustle or whatever. If you have any intentions of doing a refinance on your house or buying a house, talk to someone first, because we just want to line you up right. We want you to walk into the thing with eyes wide open so it doesn't give you trouble down the road.
Yes. So enough about self-employed people.
Wow. That was almost the whole show.
I know. You know what I wanted to talk about? The number one sector growth in the
what?
In the lending world right now. We know applications are slightly down nationwide. That doesn't mean business is slowing.
Only because there's a lot of cash.
Yeah, there's a lot of cash. But right now, the fastest growing sector is the cash out refinance. So people, this market appreciated. People have a lot of equity in their home. People are looking, while rates are low, to get money out. They want to remodel. They want to build that outdoor oasis. Cash out refinance is an opportunity to do it because the market is so high, and people are paying off high interest debt.
I would like an outdoor kitchen. That would be lovely.
Well,
cash out refi.
What's your name?
Yeah.
What's your address? Let's get started. What's your social?
What's your house worth?
Yeah, what's your house worth? I mean,
that is a good idea, and you're right. People are doing that,
and
or
rates
like
are
you said,
so low.
and consolidating. Yeah, they have these 18% interest rates on their credit cards, and they owe $7,000 on one, and $9,000 on another, and it's at 18%. Wouldn't you rather have that at 3%?
Yeah. Well, and people say, I don't want to pay it over 30 years, or I don't want to go further in debt. You're already in debt.
You're already in debt. We're just showing you a better way of paying it back.
Yeah, maybe possible tax deductions too. And it's so funny too, because a lot of people don't look at the big picture. I know. I love looking at the big picture. If you're working on a job that pays you the same amount, same salary every week, and you're just barely able to make a minimum payment, unless you get a side hustle or an inheritance, you're not going to get out of that debt. I mean, let's be real. Or even if you're self-employed and you're getting a certain amount of business every single month. What are you doing to change it? What are you doing to better yourself? If you keep doing what you're doing, you'll keep getting what you're getting. That's just a simple saying. So, all good.
And with the rates low right now and the values going up right now, and it's not a bubble.
Nope.
This is not the things that were back in the mid-2000s there, where everybody knew that was going to burst because it was all false. This is not. These people are qualified. It's just a different market. It's a straight supply and demand.
Yes.
There is so much demand right now and so little supply.
Simple.
Until that changes.
Supply, demand.
Yeah.
And
until that changes.
we have no supply.
Right.
Very low supply. Building is slow. Materials are slow. Builders are raising prices in the middle of contract.
And they're out, like what, 18 months now or
Yes,
something like that?
It's crazy. It's crazy.
You know, the other thing is I wanted to just say, people need to get back to work, right?
Hello.
I know.
That's a whole nother show.
Because that's why the builders, I guess, are out, because the manufacturers can't get workers to come to work, right?
Yeah.
Isn't that what's going on?
Yeah. All right.
To supply the builders with the nuts and bolts and screws that they need.
Don't get me started. Don't get me started. All right, let's move on. Let's talk about what's going on in the community. Great things happening with our charity of choice, West Pasco Business Association.
Yes.
We still have some heart money for you to help you with rental assistance and or utilities.
So for our realtor partners out there, we need your help with this. By all means, you guys know landlords.
Spread the word.
Landlords.
Spread the word.
If
We wanna
they
help.
have people who are behind, and right now they can't evict because of the sanctions that are in place. So by all means, let them know that we have availability, to them, that they can get their
If they've
rent
been
caught up.
affected by COVID, we may be able to help them. Just send them to our website. Check under the HEART program. The website is www.wpba.biz. www.wpba.biz. Don't forget it. Check
Why
it
does
out.
it sound like
You'll
you had
see-
too many dots in there?
I don't know. Dot, 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 dot,
Dot, dot.
Hey, and then we got a lunch and learn coming up, a really good one for June. I forgot the date, DeLynn. Do you remember?
13th?
It sounds
think.
right. Yeah, we should know this. It's not the 13th.
We never
It's-
know this.
It's the 8th.
Is that the second?
Yeah, because the 1st is on a Tuesday. Oh, that's June. Are we in June?
Yeah, we're in June.
Okay,
How
let's
about
go-
skipping to July?
It's the 13th, okay? July 13th, Lunch and Learn. Join us via Zoom. You don't want to miss it. It's about appraisals and pitfalls and what underwriting is looking for.
And one of our favorite people at the mortgage firm is going to be our guest speaker, and she is amazing.
Yes. All right, like our show, share it.
We are today and every day.
Moving forward. Have a great week, everybody.
See you next week.